I created this simple little spreadsheet to check the viability of businesses that you might be interested in buying in British Columbia. Hi, I'm Kali, and I've decided to buy a business in BC in 2025, and this channel documents my journey. So if you want to follow along, subscribe. It'll be much appreciated. All right, now, before we go any further, I am not an accountant. I'm not a financial accountant, so don't take this as financial advice. This is to the best of my understanding, and before you actually buy the business, please go to your accountant and make sure that everything makes sense. And if you see any errors in my formulas, please let me know in the comments. All right, so let's go through the spreadsheet. So I want to buy a business, and I see a whole lot of businesses being advertised with EBITDAs and prices and everything. And I wanted to create something that I can just quickly drop the numbers in and see whether it's worth even pursuing a business or looking into it. So on the spreadsheet, we've got three tabs. We've got the interest calculation tab. We've got the business, loan, and personal. So that's if you want to buy the business in your personal name, which is never a good idea over here because tax-wise, you just lose out. And this is if we buy the business in a holding company, which is the better option. We're just going to make changes on this first one because it will automatically draw the changes through to the personal one. So just if you wanted to go and see. Okay, so a quick explanation of how it works. EBITDA. So EBITDA or SDE, that is the free income that's in the business. It just shows you the money that the business theoretically will make before taxes and all the other deductions. So I'm looking at a business right now, which actually looks really good. It's got an EBITDA of $175,000, which seems, very decent, but that's not the main thing. The next tab is growth rate. Now, I mean, technically, when you buy a business, you are buying a business because you believe that you can grow it. I mean, surely you're not just buying it because it's going to stay the same. So, but for the calculation, I'm just going to leave the growth rate at 0, which theoretically would be worst case scenario. Next, we have the price for the business. How much is the business going to cost? So the business's price is $300,000. And then the deposit, how much deposit will we need to put down? Now, I need to finance the business. I'm going to have to put down at least a 20% deposit, which is going to work out to $60,000. And then the interest rate. So I'm new to Canada. I don't have much of a interest record or credit record. So I'm probably going to get a slightly higher interest rate. They told me that the interest rates are around 10% for normal business buyers at the moment, January 2025. So I'm going to actually just work on 13% because when I bought my car, I'm getting about 3% more than what it should be because I have no credit record. All right, so we're putting that in there. And now we can go down to the bottom over here. We look at our loan amount. So we're going to borrow $240,000, interest rate $13,000, term 5 years. And that's our monthly payment, $5,460. So in year one, we're going to pay $29,000 interest and $36,000 capital repayment. And annually, we're going to pay down $65,528. So over the 5 years, it's going to cost us $327,000 to borrow that $240,000. Now, if we go back to this calculation, because this is where we really want to be, year one, EBITDA $175,000. Now you are going to have to pay tax on that EBITDA in your operational company before the money can come to the holding company to start paying off the loan. So that's going to be your tax, which is 11% for smaller businesses in British Columbia. And then you're going to have your distributable income, which is $155,750. We'll get to this one a little later. For now, it's 0. So if we have a usable income of $155,750, sound a little like Zuma. Then after we've paid our loan amount or our loan annual payments of $65,000, we will have $90,000 surplus. So that actually looks really good. I mean, that's what you want to see. You want to see a big surplus here, not a shortfall. Now, let's come back to the holding company income tax. There's another video which I will link at the end, or there's another video on the channel that explains how this works, but suffice to say that you do have a tax benefit if you charge a management fee to your operations company from the holding company, because in the holding company you can deduct some of those taxes. So we're just going to go with the $35,000 a year management fee from the holding company to the operation company. And then in your holding company, you're obviously going to also have a few other expenses. I mean, you need to do accounting, you need to do some legal stuff, everything. So let's just add that in there as well. What you see is that it immediately increased your surplus, because by moving some of the taxation from the operations company to the holding company, it actually helps a lot, because you can deduct some of the interest that you're paying. So there we go. Once again, this business looks really good. $175,000 EBITDA, $300,000 price, and we're going to sit with a surplus of $94,000, which we can either use to pay ourselves, or we can use it to pay down the loan quicker, because in this business, the SDE is actually higher because the EBITDA excludes a salary that the owner was paying himself. So this is actually looking really, really good. Just to show you on the personal one, you'll see that there's a huge difference. Your surplus is only $73,000 on the personal one, as opposed to $94,000 on the holding company one, purely because of the tax benefits. Now, if we go at growth rate of 10% on this business, which should be achievable, then wow. Okay, I'm definitely going to pursue this one. Sounds like a good idea. Before we go any further, you are welcome to make a copy of the spreadsheet and use it. The link will be in the video description at the bottom. So you're just going to go to File over there and make a copy, and then it'll create a copy of the spreadsheet that you can save to your own Google Drive, and you can make adjustments in it, as much as you want. All right, folks, have a good one. Cheers.